All right, good morning, everybody. Good morning, Zeba. Nice to see you. Guys, welcome to the room. Happy Tuesday. Hope everybody had an amazing weekend. We're starting a day late today, or this week. Next Gen tradition, taking that day after the Super Bowl off. Guys, we still have a minute before we are official. I'm going to give it just a second so that everybody can get into the room. Good morning, Safia. Nice to see you. Morning, Jason. Everybody watch the Super Bowl, eat too much, have a cold beer, wake up late on Monday. Hey, Ron. Good to see you. Good morning, Claire. True story. Got the note at the top. I'm going to stop writing YouTube at the top of the paper and just write Claire. I'll know exactly what it means. Guys, it's great to have you here today. I'm excited for the week. Last week, I think, was great. Last week, we got more participation from new people than we've had in a long time. And it's such an important part of your education, guys. When you take the time to post, to ask questions, to show me what you're doing, what you're seeing, guys, that's exactly how we get to where we want to be. Good morning, CJ Canty. There's a new name for me. Nice to have you. Welcome to the classroom. Guys, for those of you that don't know me, and you're still filing in, right? This is like high school English. Maybe a minute or two after. There's no tardies here. You show up when you want to show up. I'll slow roll into the day every day. Guys, my name is Mark Novak, and I'm going to be talking you through the basics initially. We're going to focus on really keeping it simple. If you're brand new, I want you to let yourself be a student. I want you to remind yourself that this is a new endeavor for you, and it's okay to not know everything in the first day, the first week. My people that have been here 3-4 weeks will let you know that every day it's a little more clear. Every day things become a little easier, make a little more sense. So we're going to keep it simple in the beginning, guys. But before I do anything in this classroom, each and every morning, I go to Forex Factory and I make sure that I'm not trading into news. Today is Tuesday, February 14th. Guys, don't mess it up. There better be some flowers and a mushy card on the dining room table this morning. Ladies, don't mess it up. There better be mushy cards and flowers on the dining room table this morning. Tuesday, February 14th, guys, at 8:30 a.m., we had what is high impact news. A red box, booze, and a lottery ticket works too, Ron. It was CPI. Guys, I don't know what the CPI is. I don't care what they said, but what I do know is that when that box is red, it's high impact, which means that it can make the market move erratically. I'm not sure what it did. I was cooking breakfast at the time because I tend to walk away from my computer during high impact news. I want to make sure I'm not trading in front of a freight train of we called it the freight train of emotion the other day. Just people making knee-jerk reactions to what the news says or predetermined reactions. Whoops. And then, guys, we have the events archive as well. I'm going to show it today because this is Ninja Traders. Nice, Gary. And I think today's the last day of their sale. Maybe tomorrow, or maybe yesterday was. Guys, on the 16th crude oil rolls, we're going to change contracts midweek, which means that the current contract that we're looking at right now is expiring. So on Wednesday, we'll go over that. We'll talk about how to roll it. We'll go over and we'll talk about getting you set up and making sure that you're comfortable. If you're one of my NinjaTrader 8 users, it'll roll automatically. If you're one of my NinjaTrader 7 users, we'll teach you how to do that. And we'll get you the answers straight from the education page. Everything that I talk about is going to come from this page. You know, I say this every morning, and I think that it bears repeating. There are no secrets with Nexgen. I don't hold back trying to keep you around. I'm not in the business of keeping you in the dark. I'm in the business of giving you clarity, letting you see what it is that you need to see to be successful with everything that you do. And there's a couple resources on this education page that are going to help you with that. The first one is a software user guide. Software user guide is going to be your NinjaTrader how-to, how to open, how to close, how to put in stops and targets, scale your charts, how to change the look if you want. This software user guide is going to come in handy in a couple days when we add, where are we going? We're going to roll over, adding symbols, rolling contracts, moving those dots over market flow. Guys, this is your NinjaTrader how-to. But I think that the most important thing here on the NinjaTrader is how to take a picture. Being able, sorry, I'm trying to get my capture software up here. Being able to take a picture of your chart and then from that picture post it in the room. And when you post it in the room, you and I get to have an amazing conversation about anything and everything that you see. So I want you to do me a favor. If you're brand new, pay attention. We're going to take a picture real quick. Guys, your capture software was downloaded when you started your demo. A lot of tough areas right now, right? Resistance to hold, now into a termination condition below, guys. Let's take a picture hitting that big red button. And I'm going to click and drag from my upper left to my bottom right, making sure that I get both of my charts. And when I release, capture software is going to ask me if I want to capture an image. I'm going to click that camera, and up comes an image preview. If you need help with this, I want you to reach out in Classroom. I want you to talk to your salesman. I want you to go to Tech. But we can use arrows to point things out. We can say, wow, those triggers were pretty flat, weren't they? We can say, oh my gosh, those triggers weren't trending together. We can use shapes, talking about different things that we see, guys. But the most important thing that you can do as a new user is write down on your charts. Good morning, Gary. Good to see you. Guys, take a second to write on your charts. Tell me what you see. Write your rules. Every time you take a trade, write your rules on your chart. I'm going to put a picture that'll help you with that. And then when you've given me the information, why you did what you did, how you felt when you did it, I want you to click this upload button. And that upload button is going to send that picture to the screencast cloud. And from that cloud, they're going to provide you a web address. If I click copy, this address is going right on my clipboard. Let me see if I can sneak the chat room over into the view here, guys. I'm going to paste it right here in the room. Control V if you're using the pop out. And it's going to put that picture right in the room for you. And then from that picture, you and I are going to have a conversation. You're going to post and I'm going to reply. We're going to analyze what you did. We're going to talk about the looks that you see. Guys, give me a Y in the room if you can hear me, please. Is everybody okay? Can you hear me, or is it just Joel? All right. Awesome. Thanks, guys. Sometimes you'll come in and you won't hear. It's okay. Just go, hey, Mark, are you talking? And you may need to reboot. You may need to turn your volume up. So just make sure that you're good there. So guys, from the screencast address, you're going to be able to post in the room. Guys, if you're brand new, I want you to practice. I want you to take a picture and just post it in the room. Say, hey, Mark, here's my practice picture. Here's my test picture. And then with that same address that you put in the room, I want you to come to your spreadsheet, and I want you to right-click, and I want you to paste that screencast address right into your spreadsheet. Everybody has the spreadsheet, guys. If you don't have it up and open, you're not sure where it is, I want you to go to your search bar, and I want you to type in 90. And it's going to find your Nexgen 90-day training worksheet. Guys, this is the second half of getting you to where you want to be, is tracking everything that you do. So I'm going to take that picture and post it in my spreadsheet. I'm going to click my insert button. I'm going to click this link, and this is going to turn this screencast address into a hyperlink. Paste the address into the address bar like you're going to Google. And then up here, you're going to put test or win or lose or broke rules or followed rules. But you're going to turn it into a hyperlink so that you can click on it. Guys, these are two of the most essential skills that you can have as a brand new user. Being able to take a picture, being able to present the picture in class, and then being able to track that picture into your spreadsheet. That is the path to success, guys. Again, I'm going to ask, can you hear me, guys? I'm not muted. Ron, you can hear me? No worries. CJ, Jonathan, everyone can hear me? Guys, sometimes it's not me. Sometimes it can be you, and that's okay. I'll just stutter around for a minute while you get it back. No worries at all. Ain't Mark. Thanks, Ron. Guys, the next thing that we're going to look at is going to be the education page. The education page is where we talk about rules. The education page is where you have everything that you need. And then this is the picture that I wanted to share with you. Your step-by-step path to becoming a confident trader is going to be posting your trades in the classroom for review and tracking it in the real-time spreadsheet, guys. So we're going to do that today. We're going to talk a lot about what we see. We're going to talk about the live market. We're going to talk about termination conditions. We're going to talk about having momentum. And we're going to talk about 3 simple rules to get you guys where you want to be. We're going to talk in great depth about having momentum on your 13-2, large charts having strong trigger lines. Going to talk about no termination conditions on the 13-2. And we're going to talk about how to get into the market. And we're going to focus on these things using the live market. We're going to be able to identify strong trigger lines. I'm going to take everything off of this chart. And guys, let's have a quick little rundown. What is a strong trigger line? Well, this right here is the absolute perfect picture. In an uptrend, when your background is green, guys, this is the S&P this morning, right after news releases. Small triggers break away from and accelerate away from the large trigger lines. It's this space created between the two that lets me know that the odds are favorable for the market to continue in the direction of the trend. This is rule number 1, defined in its purest form. Strong trigger lines provide me the advantage of momentum. In a downtrend, smalls accelerate away from the large. The space created lets me know that the odds are favorable for the market to continue down. So guys, rule number 1, it's a very simple look. It's making sure that you have advantageous momentum. So give me a Y in the room if you're with me. This is your strong trigger look. Guys, this gets everything in motion. This is how each trade starts in the beginning. Odds favorable momentum. And then guys, see how those small trigger lines work their way back inside of the large trigger lines? Let's label this one. This is weak triggers. Anything can happen up or down. One is odds favorable. One is anything can happen. Guys, I'm going to share this picture with you because if you'd picked one rule to commit to on day 1, always have the advantage of momentum. Always have the advantage of a market that's likely to continue in the direction of the trade. What we're going to do is we're going to turn these advantages, these 3 little rules, into a high probability trend trade. We're going to use that advantage of momentum. We're going to use that advantage of a clear path. And then we're going to use the advantage of entering where the market is likely to continue. And that's going to be our trade. That's going to be our high probability trend trade. Absolutely. So Biota, I'm not sure that I'm saying that right. It's this space created between the two that let me know that the odds are favorable for the market to continue in the direction of the trend. So then if we back up a little bit and we go to rule number 1, right here in the user manual, I've got everything there for you. Mark B. Okay, thank you. Hey, Mark B. Or Mark, I'm Mark too, so this works out. That'll be easy to remember. And I'm Mark, so we're good. So when we're talking about the advantage of momentum, smalls break away from, accelerate away from the large. The large are wide, they're angled in the direction of the trend. Look at the wording. The odds are favorable for the market to continue in the direction of the trend. Awesome, Gary. In a downtrend, when the background is red on your 13.2, smalls break below. Good morning, Indu. Space between the two, odds favorable for the market to continue down. This is your first advantage, looking for a high probability trend trade. And then there's that weakening of the triggers that we talked about. Smalls inside of the large. Anything can happen up or down. Guys, this picture is probably 3 or 4 years old. Doesn't that picture look an awful lot like this picture? Guys, everything that we do revolves around patterns, revolves around things that happen over and over, creating advantages. And this is our advantage of momentum. So rule number 1, make sure that your market's got an awful lot of giddy up in the direction you want to go. And now I'm going to put indicators back on this one. Good morning, Jim K. Because rule number 2, if we go back to that picture, rule number 2 says no termination conditions. Make sure that you have room to your profit targets. So we already have momentum. We are 1/3 of the way to a trade. Now we're going to make sure that we have a clear path. Well, termination conditions become pretty easy to recognize. If price reaches an area, whether it's Fibonacci resistance, Fibonacci support, and absolutely none of the trigger lines are able to break through that area, well, then we have a termination condition. We have an area likely to stop the market. And when we talk about those areas, once again, I'm just going to go straight to the instructions. Those areas can be blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1 dots, cyan divergence high or low line, large chart midband, if the large triggers are a full bar away. And it's really a simple process. It's a 2-part process to be able to identify on day 1 a termination condition. The first thing that happens is price reaches an area, meaning that these price bars either rise up to resistance, fall down to support, they run into 1-to-1s. And when price reaches an area, I want you to ask yourself a question. I want you to just pause for a second and say, where are my trigger lines? Where are my T3 trigger lines? If all of your trigger lines remain above support, well then support's likely to stop the market. It may create a reversal. We have given up the advantage of a clear path. You'll see it up top as well. Price reaches support up here behind this little message. None of the trigger lines have broken through. We don't have the advantage of a clear path. When both the small triggers and the large triggers break through an area of support, that area of support begins to act as resistance. This is when we consider an area to be broken. This is when we have that advantage of a clear path. So guys, one more time, give me a Y in the room if you're with me. Price reaches an area, whether it's resistance or support. If the trigger lines remain below resistance, well, then resistance may reverse the market. We give up the advantage of a clear path, guys. You're trading into an area that may hold the market. So no long trades. Price pulls down to support. Absolutely no trigger lines break through. No short trades. And sometimes you'll get caught between areas, guys. Nexgen gives you the advantage of recognizing these key areas that are being recognized by deep pocket institution traders, by people that really move the market, and we can keep ourselves safe from traveling into one of those potential areas. Even with that odds favorable momentum, with rule number 1 met, with the advantage of momentum, if price reaches an area of support, if none of my trigger lines break through, guys, we have a termination condition. We have an area likely to stop the market. When a termination condition creates a reversal in the market, meaning that those large triggers maybe go from red to green from support or green to red from resistance, we have what's called a good or a strong top and bottom. And that's just a termination condition that causes a reversal. So I want you to remember this term. Termination condition that causes a reversal is a strong bottom from support. Termination condition that causes a full reversal is a strong top from resistance. And this becomes important because this is where I plead with you new users, you guys that are with me for the first week, the first day. I want you to focus on one thing for 30 days, for 20 trading days, for the first month. I want you to focus on entries. I don't want you to worry about mastering the software in the first week. I don't want you to worry about making $1 million on simulator. I want you to focus on entries and focusing on the trend trades, the high probability trend trades that happen after a termination condition is your best chance for success. Focusing on a high probability trend trade, and I'm going to define this real quick. A high probability trade means that every indicator on all of your charts line up for a trade. They agree. Strongest triggers, just like we talked about. Rule number 1, nothing in the way, no termination conditions. And then finding that entry where the market is likely to continue. If you focus on the entries for a high probability trend trade for 30 days, guys, it's going to give you the most important skill that you can have as a day trader. It's going to teach you to read your markets. And that's all we do, guys. We read our indicators, we read our charts, and you will be able to identify through opening your charts and looking at the indicators where the market is likely to continue and use that continuation point for entry on a high probability trend trade. You'll be able to understand where the market is likely to go using Fibonacci and momentum. This is going to allow you to make intelligent decisions on profit targets, and you'll be able to understand where the market is likely to stop, those termination conditions, and giving yourself the advantage of a clear path each and every time you pull the trigger. So we begin to look. Smalls accelerate away from the large. They're creating space. The smalls have broken through the area. The large haven't quite broken through. This is an area with the potential to break based on momentum. I'm going to circle this right here. And I want you to see the circle on this tail. The circle on this tail on my 13.2 lines up with an area of resistance inside of favorable large triggers on my 5.1. 2 charts for 1 trade. 13.2 is going to give us the information that we need. It's going to tell us the trend of the market, whether it's up or down. Green is up, red is down. It's going to let us know if rule number 1 has been met, that odds favorable momentum, and it's going to make sure that we're not trading into a termination condition. This 13.2 is a broad stroke of a brush, guys. It is a faster, a larger, slower chart, And this is going to give us rules 1 and 2 met so that we can look for that entry on the 5.1. When the rules are true, momentum, clear path, we're going to go to our 5.1 and we're going to use it as an entry chart. We're going to refine that broad stroke of a brush, and you will identify where the market is likely to continue and then use that continuation point for an entry for your high probability trend trade. So 2 charts, 3 rules. You'll notice that I circled a tail. Odds favorable momentum, if you see this tail, it's a potential entry. I'm going to do it again because I see it again. This is the S&P today. Odds favorable, I'm going to circle a tail. And I'm going to go back and I'm going to repeat this process as I scroll back. Strong trigger lines, everything says down. Smalls are through the area, but the large are above. Guys, this is an area with the potential to break based on the momentum of the market. Once these large and small get below, the area is broken. Before they break through, it's a termination condition. So we're seeing all three steps right here in one picture. And let's do a quick review on termination using this picture. All triggers below. Let's do this. We'll call it all through, broken area. Up here, we're going to say none through, no shorts, area may reverse the market. You guys with me on that one? Nothing through, be patient, be calm. Everything through, you can look for an opportunity. You guys, then we have this one. Smalls through, large not, potential to break with momentum. This is what we call a 50-50 trade. And it's not 50-50 because of your chances of success. It's 50-50 because half of your indicators have broken through and half of your indicators have not. Half of your triggers are below, half of your triggers are above. Guys, this is what we call a medium probability trade. And let's go back to our glossary of common terms, meaning that most of your indicators line up with the trade. You may have momentum. You may have the perfect entry, but you may have an area that has the potential to break rather than has broken. And this is going to ultimately be the majority of your trades. After that first 30 days, your ability to read charts is going to have you identify that problem. Your ability to read charts is going to have you identify your trouble spots. It's going to allow you to reduce risk, to get to a zero loss level, but you have to execute and manage them assertively. So we're going to focus on clear paths initially, and you're ultimately going to work your way into these medium probability trades. So when I see a circle or when I see a tail, whether it's medium probability or high probability, we're going to give it a circle right at the end of the tail, and then we're going to talk about our entries and see what sort of opportunities are presenting themselves this morning in the S&P. Are you guys with me so far? Smalls above the large are wide, odds favorable. Smalls break through the area, larger up, potential for that area to break, or we do have a clear area. And I'm scrolling back, guys. This is all this morning. Smalls below the large. We haven't quite reached Fibonacci support. Let's see if this tail creates an opportunity. You'll notice down here I've lost the advantage of momentum, right? Smalls inside of the large, not odds favorable momentum. I'm not going to circle that tail. I'm not willing to give up the advantage of momentum as a brand new user. Look what news did, guys. Oh my goodness. And what you're going to find is the patterns are true even during news. Even when the market's being erratic and misbehaving, you're going to find that these rules still, these patterns still hold true, but sometimes it's a little fast to get there. So guys, that's just going back to 8:30. That's an awful lot of circles. I'm going to minimize that a little bit, and then we're going to talk about how to get into the market. It's important to me that you understand we have already determined on the 13.2 that we have odds favorable momentum. We've already determined that we have the advantage of a clear path on the 13.2, right? So rules 1 and 2 have been met. A trade equals momentum, a clear path, in an entry area. And let me give you guys this one in the room one more time. Save this one in your spreadsheet. So now that we have the advantages of momentum and a clear path, guys, let's pinpoint with accuracy where the market's likely to continue so that you can take an entry, so that you can focus on getting into the market at the best of the best spot. During the live market, this will be the look of your 5-1 chart. The 13 triggers are strong. There's nothing in the way. This is the moment that you start looking for your entry. The first time you turn your attention on the 5-1. And you're going to focus your attention on the 5-1 large triggers. They should be up and strong, trending one on top of the other. This is what your smaller chart is going to look like when the larger chart says it's time to go. And all I want you to do is focus your attention on the areas that are falling within those trigger lines. The areas that we'll take a trade from, that you'll enter the market at, can be fibs, can be mid bands, or it can be one-to-ones, guys. 3 options for entry. Fibs, Fibonacci support and a long, Fibonacci resistance for a short. Mid bands, green mid-band for a long, axis support, magenta mid-band, or axis support, not short, magenta mid-band, axis resistance for a short, or these yellow one-to-one dots. And depending on where the market is in relation to them, if the price is pulling back to it, it'll function as support. If price is pulling up to it, it'll function as resistance. 3 little areas inside of favorable large triggers. And our rules say that you're going to wait for a retracement. You're going to wait for a pullback on the 5-1. And you're going to use a limit order to buy or sell an area inside of favorable large triggers. And I'm going to show you my favorite picture. Why do we use the 13-2? We use the 13-2 because the 13-2 is a big look at the overall picture, right? It's the direction of the market. This is where the group has said, we have and we've created momentum on the 13-2. This is where the big group has said, I don't see any key areas, and with this momentum, we're likely to push through it again. Well, we're going to let the small crowd, the people that aren't in sync with the guys in this large crowd, these are the guys that say, nope, I want it to go down. Or if everything is going down, they say, nope, I want it to go up, guys. And this is going to get Nexgen users to their best of the best entry. We're going to use a limit order to buy or sell a pullback. That pullback starts with a reversal bar on the 5-1. And at the time of this reversal bar, you will create your window of opportunity. And your window of opportunity extends from your highest point of support to your lowest point of support inside of favorable large triggers. Meaning from this mid band all the way down to these one-to-ones. I'm going to right click on that chart and I'm going to activate a limit order. I'm going to wait for the market to come back to the area of support inside of favorable large triggers. And if it does, I'm long at 79.21. I've entered this trade at the top of the window. And remember that I have the advantage of momentum. I have the advantage of nothing in the way. And now I have the advantage of a market that is likely to continue from this point. So guys, give me a Y in the room real quick. If you're with me, I'm going to go through each parts of a trade. We have the advantage of momentum. Strong trigger lines always lead the way. Strong trigger lines get you focused on the best of the best. We have the advantage of a clear path because the market has not reached an area likely to reverse it. And now we have the advantage of an entry area. Using a limit order to enter the market where it's most likely to continue, guys. This is a trade that I'll take 1,000 out of 1,000 times. I'll put my initial stop below the window of opportunity where the market shouldn't go. And if you focus on this one trade, this simple 3-rule, 2-chart trade, this is a trade that's been shown to potentially win 70 to 80% of the time. 70 to 80% of the time, it's profit target reached. Once that trade begins to move in the direction of the trend, you can reduce your risk below that reversal bar. And because we waited for the pullback to the areas inside of favorable large triggers, the distance to our profit target has been increased. So guys, 3 rules. Whew, that market's going down, right? 3 rules on 2 charts. Here's our circles, right? These potential entries. Here's those exact same circles on the 5-1. The first one, odds favorable, area likely to break, and it pulls right back to an area of resistance inside of favorable large triggers. This is your pattern. Second circle, you'll notice that it pulls back to an area of resistance inside of favorable large triggers, overruns a little bit, and then we get this look right here, guys. Divergence. Divergence on the smaller chart can tell us a lot of things, but the way you're going to use it initially, straight from the user manual, straight from rules number 2, is initially you're going to use divergence on that smaller, faster chart. The only termination condition that you're going to look for on that smaller, faster chart, 3 divergences in the same location may reverse the trend. It may terminate the trend. And this becomes very powerful when the small triggers are inside of the large. So I like to do this for my new users, and I know that I have some new people in here. What is this divergence telling me? Well, when price comes down and forms this pivot, or price comes up and forms this pivot. A pivot is just the market goes from down to up or up to down. What divergence is telling me is that momentum isn't following price. So once again, price creates a pivot. Momentum isn't following. This is written in the background. Price creates a pivot. Momentum isn't following. So what is divergence? Divergence is a loss of momentum. When we see that loss of momentum 3 times, it may terminate a trend. It may push it up a little bit. It may push it up a lot. But chances are it's going to push it up beyond that best of the best entry. You'll notice that the small triggers are anything can happen as opposed to odds favorable. So this is enough to make you say, you know what, I need to pump the brakes on this entry at resistance inside of favorable large triggers. Let the market do what the market's going to do. Your small chart's going to give you that information for a high probability trend trade. When you work that medium probability trade, you may end up right here at 1-to-1s entering the market. 3 divergence in the same location may tell you that it's time to manage out. So we're going to use that 2 different ways: to identify a potential turning point, and then ultimately to manage a medium probability trade. You'll see how it happens right here. 3 divergences in the same general location, small triggers inside of the large, and it does end up pushing beyond that area of resistance inside of favorable large triggers. We can use this information to help us identify some change that's happening on that larger chart. And then everything comes back, everything agrees, and then it pulls back to that area of resistance inside and continues the move down. Why are we circling the tails? We're circling the tails because they are potential entries on the 5-1. And what you're going to find is that if you scroll back on your 13-2 and circle these tails, and they line up with the areas of support or resistance inside, then you begin to identify and trust this look between the 2 charts. So once again, at 854, smalls below the large are wide, they're angled in the direction of the trend. We have an area with the potential to break. If I scroll back to my 5-1, it does in fact pull back to resistance inside of favorable large triggers. All we're doing is identifying entries, guys. Give me a Y in the room. All we're doing is identifying an entry, how to determine where the market is likely to continue. So let's identify, let's do one together. Let's get rid of this circle. And guys, this is going to be your drill. I hear a lot, Mark, in the moment, it seems difficult to understand where that market's likely to continue. I'm about to teach you exactly how to practice this to take that strain off, to make it easier for you. So let's start on the 13-2. On my 13-2, small triggers above the large triggers. Let's get rid of everything but momentum. I don't want you guys focusing on anything but entries right now. I believe that is it. Let's make it big. Nope, that wasn't my picture. $46, $47. I think news was still moving things. All right. So rule number one, momentum. Small's above the large are wide. They're angled in the direction of the trend. Do we have the advantage of momentum on that 13.2 chart, on that larger, slower chart? And especially new users, work with me on this one. Absolutely, right? You see the space between the two? Here we go. And now we need no termination conditions, no areas of resistance as the market moves up. So do you see how we have a clear path? We're not running into anything. There's nothing above us. I'm going to have room to a target. Rules 1 and 2 are met on my 13.2 chart. Everybody good with this look so far? This is what sets it off. This is what gets me looking at my 5-1. Well, if this is my 5-1, remember that rule number 3 says that we're going to buy because we're in an uptrend, an area of support inside of favorable large triggers. So I'm just going to focus my attention on the market moving up. I'm going to look and see where are my large triggers and where are the areas that may fall within. Right now it just looks like a mid-band. Do you guys remember, new users? What are we waiting for on that 5-1 so that we can identify our window of opportunity? As the market trends up, there's momentum. Absolutely, Sam. We're looking for a reversal bar, something to signal the beginning of a move down. Look at how far it's going. New users are going to say, oh my gosh, I need to jump in. I've got to jump in. This is going without me. Next-gen users with a little bit of study realize that this reversal bar is exactly what we're looking for. We're waiting for that best of the best. So let's create a window of opportunity. So here's our large triggers, right? From top to bottom. I'll extend it this way just a little bit so you can see it. And the divergence did print, absolutely. So, Mark, that is one loss of momentum, right? One loss of momentum on the 5-1. But remember, on that broad stroke of a brush, on that overall temperature of the market, I have odds favorable small outside of the large. I'm not going to let one divergence affect this much momentum. I'm not going to let one little divergence scare me out of the advantage of a clear path. If anything, this one little loss of momentum, guys, is hopefully going to push us right back to our best of the best area. So there's my large triggers. Does everybody see it? Let's see if I can make this easier to see. From the top to the bottom. But that's only the first part of finding the window. I'm looking for one that's pretty easy to see. We'll go yellow. There we go. From the top of the triggers to the bottom of the triggers, but now we're going to identify our window of opportunity. And our window of opportunity extends from the highest point of support to the lowest point of support. Do you notice how the trigger lines are up and strong, but our window is really only 3 or 4 ticks wide from that highest point of support to the lowest point of support? Guys, give me a why if you see this, because a lot of new users say, well, I better get in at the top of the window when they really are seeing the top of the triggers. There's the top of my window. There's the bottom of my window. Because of the momentum on the 13.2, because there's nothing in the way on the 13.2, I'm going to activate a limit order. I'm going to right click and I'm going to put buy limit just above. No worries, guys. So let's slow down a second. The rules say that I'm going to buy an area of support inside of favorable large triggers. And Sam, there's your answer right there. Let me type it into the room. I'm going to use a limit order to buy an area of support inside of favorable large triggers. All right, guys. So first we identify large triggers. Here's the top of them. Give me a Y in the room if you see it. This is the uppermost point on those large triggers. This is my lowest point on the large triggers. Everybody good with that? Guys, this is a great question because this is very common. I appreciate that you guys are asking it. So if my rules say, and listen to the words, buy an area of support, what can an area be? An area can be fibs, right? Areas can be a mid-band, or an area can be one-to-ones. Is everybody good so far? And where do those areas need to be? They need to be inside of favorable large triggers. Ziba, great question. Nowhere in your rules does it say anything about divergence, does it? All we're doing is finding the best of the best entry. And the best of the best entry comes from the area of support inside of favorable large triggers. And guys, remember that we're keeping it simple. We're letting ourselves be new. The only thing that we're focusing on right now is entering the market, right? We're not worried about anything other than the best of the best spot. So we've got the top of our triggers, we've got the bottom of our triggers, and guys, once again, now let's form that window from the uppermost point of support to the lowest point of support. Are you guys with me? Our window of opportunity is from the highest point of support to the lowest point of support inside of favorable large triggers. Our favorable large triggers tell us where to start looking, but then are identifying the mid-band mark. Absolutely. The highest one is going to be the fib, right? The uppermost. The lowest one is going to be the mid-band. And because we have so much momentum, we're going to activate a limit order right at the top. Are you guys with me? And we'll go through this a lot today, guys. We're going to keep doing it. We're going to look at the live market. But this is how you can study. This is how you can begin to identify your entries. You can scroll back and look. Nope. Yes, Safia, if the market is trending down and we're looking to go down, then it's a sell. And because the market is trending up, we're looking to buy. Does that make sense? Guys, these are great questions. These are the questions that everybody wonders. Always have the courage to ask. So guys, this yellow line represents, let's make it sienna. This brown line represents my limit order. I right-clicked and I hit buy limit 2 right here. So I'm waiting for the market to come to me. And it's either going to show up or it's not, right? I have no control over that. And the market comes down, and I'm thinking to myself, I sure hope it shows up. And it comes down again. And I'm thinking, man, what if it doesn't? Shouldn't I jump in now? Notice that I have strong triggers on my 5-1. Smalls are outside of the large. I have odds favorable momentum. I'm going to trust the process. And that market comes down. And guys, we're now in the market at 51.25. Give me a Y in the room if you're with me. Odds favorable, no terminations, limit order waiting at the highest point of support inside of favorable large triggers. Guys, my initial stop, when I set up NinjaTrader, My initial stop is right here at 12 ticks because it gives everything a chance to move, to kind of do what it's doing. What I'm going to do is I'm going to just, I don't know, I can reduce a little bit. This is the bottom of my window of opportunity. 4150 is the bottom of my large triggers. I'm just going to go ahead, keep my stop down here a little bit, and we're going to wait. Well, it happened right away. There's our reversal bar in the direction of the trade. So I'm going to take my initial stop, and I'm going to drop it about 2 ticks below that reversal bar. So what's happened so far? The advantage of momentum, the advantage of no termination conditions. I'm in on the wrong spot here. The advantage of a pullback to an area inside of favorable large triggers. Because I waited for the pullback, when I get this reversal bar, look at how minimal this risk is, guys. We're going to talk about a plan that puts you in a position to look for profits at $100 and $200. Which means that if you're in at 51 and a quarter, on that reversal bar, you've already banked $100. You've already put $100 in the bank. And you're probably at break even with absolutely no risk. My next stop is just 54.50. And guys, look at that. Because of momentum, because of nothing in the way, because of the perfect entry, this would have been a very easy $300 trade. All right, give me a Y in the room if you're with me on this one. That's your entry. That's all we're focusing on for the first 30 days, guys. I'm not worried about making money. I'm not worried about counter trend trading. I'm not worried. Ziba, what's your no? Let's clarify. And because of that entry, I can take quick profits, or I can use Fibonacci to determine where the market is likely to go. Oh, okay. No problem. We'll go through that for you. So Safia for the mini S&P, 100 and 200. It's simple, right? And we'll talk about that in the plan. Because I want you to see, if you're talking about what Safia just said, if you're looking for the most simple trade, perfect entry, easy management, this yellow line represents a $300 trade on 2 contracts. From 41.54.50 all the way up to 40.60.50, guys, that's another 6 points. That's another $300 on top of it for that second contract to run using Fibonacci to set up profit targets. I'm not worried about home runs in the beginning, guys. I'm not worried about being some sort of rock star trader with a huge P&L. I'm on simulator for 30 days, right? On simulator, focusing on nothing else but the absolute best of the best trades. Focusing on nothing but having the utmost advantage every time I pull the trigger. That's the goal. Are you guys with me on that one? Give me a Y in the room. So let's go on crude. And you know what? Sam User just said in his replay, he realized that entry matters a whole lot. If you got in higher, even with large triggers, you get stopped out more often. Absolutely. Why do we get in? At the areas? Because the area is the spot where it's most likely to continue. Guys, this is crude oil this morning. Everything says down, tail end of momentum. We're coming from a termination that creates a full reversal. Smalls are outside of the large. And guys, look how the market pulls right back to resistance, right back to that mid-band, and continues down. So your job for the first 30 days, guys, this is crude oil live. What do we see? All of my trigger lines are above support. Do I have odds favorable momentum on my 13.2? Brand new users, just a quick look at the trigger lines. Do I have odds favorable or anything can happen? No, I don't, right? So I'm giving away the advantage of momentum. So check this out. There's another loss of momentum coinciding with the loss of momentum. Give me a Y if you see it. I'm losing momentum once. I'm losing momentum on triggers. I'm losing momentum twice. I've lost momentum on triggers. Look at how far down it pulls. We're beyond those trigger lines, aren't we? We're below everything. We're identifying change on the smaller chart. 1, 2, 3 divergences in the same location. Small triggers inside of the large. Isn't it amazing that with a little bit of study you can identify advantages, you can identify disadvantages, and guys, you have a very simple set of rules that when those advantages are present, you can enter the market in an area where it's likely to continue. This is your focus for 30 days, guys. For 30 days, high probability trend trades, right? For 30 days, focusing on the one trade that's going to teach you. Mark, take care. Thanks for being here this morning. Focusing on the one trade that's going to teach you how to read your charts, how to understand where the market is likely to continue, where it's likely to go, and it's likely to stop. Is everybody with me on this one? That's a lot for a first hour, isn't it? That's a lot for brand new users. I totally get that. We talk about this every day. Every day we talk about advantages. Look what happened on the S&P. Every trigger line broke above support, support, and one-to-ones. Do you guys see it? When price pulled back to this area, how many trigger lines went below that area? 0, right? And that area held. That retracement back to support stopped the market in its tracks, and guys, it just zoomed all the way up to that next key Fibonacci area. Your ability to read your indicators identified this as an area likely to stop the market, which means you guys didn't try to go short at resistance, which means you didn't get run over. And as you grow with the software, maybe you found an opportunity for long. Because what we just witnessed here is what we call the gap theory. And we'll use this one real quick and then maybe take a little break. Guys, when price accelerates away from these large triggers, notice how the large triggers didn't follow. There was room for an entire reversal bar before it hit. Guys, this is the gap theory. This isn't necessarily a way to get into the market, but what it says is if price pulls away from those triggers too fast and too far into a Fibonacci area, then it snaps back to the triggers. This snap back to the triggers keeps new users from thinking about short trades with red triggers with a red background. This area acts as a vacuum right here. Not a trade to get into, but it is an opportunity to stay out of, potential loser. So guys, all we've done so far today is we've identified strong triggers, we've identified no termination conditions, and watch this, Ziba, right click, buy limit 2. We've identified the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers, guys. This is what we would call a pre-trade picture. Making sure that the rules are met. Do we have odds favorable momentum? Guys, give me a Y or an N in the room. Small's above the large are wide. Absolutely. No termination conditions, right? Have we reached an area of resistance? Not yet. So what's left? Here's my top of the triggers. Here's my bottom of the triggers. Do you see it? And then one more. One more. Here's my highest point of support. Whoops. Here's my lowest point of support. Do you see how the triggers tell me where to look? And then my areas tell me where the market is likely to continue. There's the reversal bar. Guys, how big is that window of opportunity right now? That's it. That's my window of opportunity. So guys, this is a trade that when the rules are met, typically wins 70 to 80% of the time. Let's see what this one does. We have the advantage of momentum. There's absolutely nothing in the way. And we've identified where the market is likely to continue in the event that it continues. Look at how price pulls all the way back. It may get us, it may not. But 52 is 2 ticks above. Pulled right back to it, 2 ticks above that mid band. And guys, it was almost instant, wasn't it? If you got in at 52, you've already made your $100. You're already break even. Didn't it? Hit your target so fast. Guys, give me a Y in the room. We just talked through a high probability trend trade entry. And now let's use Fibonacci to identify, should the market decide to do it, where the market's likely to go. On my 5-1, I have 1 slowdown. Now I have 2 slowdowns, but I have odds favorable momentum. I haven't gotten that third divergence. I've still got areas inside of favorable large triggers. I still have momentum. I still have a clear path. If one couldn't get in, would you try to get in again with a lower divergence? Sam, it would depend on what my rules say. If I missed my entry and none of the conditions changed, remember the 13-2 leads the way. And I'm probably with Paul with the smalls inside. I may not take a shot at this one, right? I may not take a shot. But if I'm looking for $300 on that trade, I'm already paid and thinking about my next entry. And where is the market likely to go based on Fibonacci? Guys, when we come back after the break, we're going to talk about getting this plan in place so that you guys can nail your entries, right? We're going to talk about getting this plan in place so that you can have a simple approach to management, an easy way to get in to take away the fear, the anxiety, not really worry about anything other than entries. We're going to talk about all of that. I'm going to leave you guys with the market here. Well, there it goes. 60-50 right in that area. 60 was probably our first target. 62 also has the potential. Guys, does anybody have problems with 9 or 10 points in the S&P from a market with momentum, from a market with no termination conditions, and being able to pinpoint? Guys, didn't we pinpoint the second that reversal bar formed? Didn't we identify? And if we're 2 ticks above this area, you caught that one. So here's the key, guys. What we do, what you look for, isn't difficult. Well, we already surpassed the first one. There's your second. But it takes study, doesn't it? It takes a little bit of time. It takes creating trust in a set of rules that provide an advantage. And it takes repetition. And every time you go back and you see smalls outside of the large in a tail, I want you to circle these pictures. Guys, there it is. Target reached. 10 points away, live, right in front of you. Welcome to Nexgen. This is your first 30 days, guys. And I'm also going to give you a checklist. You had odds favorable momentum. That's a yes. You had no termination conditions. And you had an area for entry inside of favorable large triggers. And it went straight to the target. Guys, this is what I talk about every day for the first hour, is training your brain to recognize when the conditions are met. We identified where the market was likely to go. We identified where the market was likely to continue. And we identified, now with no trigger lines through, where the market is likely to stop. Indu, I see that you've posted this one twice. Indu, I worry about every line on my chart. This is a small swing 1-to-1. You have to gauge the advantages. So yeah, I definitely look at it, and then I start weighing out what's for the trade, what's against the trade. Do I have so much in my favor that I'm willing to let one small issue keep me out? Or am I willing, Indu, to take that medium probability trade, knowing that I may need to manage it assertively? See how that works? Identify a small issue. Your small issue, your single issue, is that 1-to-1. Can you execute it? Can you manage it assertively? Can you look for those changes on the 5-1 in the form of divergence? So that's my answer. If everything says go except that purple line, I'll manage assertively. But my plan isn't your plan, right? You have to write your own plan. Guys, I'm going to leave you with the S&P. Let's see what it does as we go into this 10 o'clock hour. When I come back, I'm going to start looking at the charts that you guys have been posting. That's the second hour, guys, as we start talking about what you guys see through your charts, through your questions. So if you have charts, post them. If you've never posted a chart in my room, guys, do me a favor, post a chart. Show me your desktop. Show me a picture of your cat, your dog. Show me what you're doing. D, do you have both of them open? Well, then it's going to be hard to switch. So you're going to have to go File, Workspace, and make sure that they're both open first. And then once they're both open, D, what I do is I get rid of my untitled workspace. And if I click Shift F3, it'll toggle in between the two. Just like that. Sam, you don't for the first 30 days. Let me take a quick break and refill my water, guys. When I come back, we're going to talk about a plan. We're going to talk about management to keep it simple. But let me answer that one real quick. Sam, your first 30 days teaches you to understand by opening up the software and reading your indicators where it's likely to go, where it's likely to stop, where it's likely to continue. It's this skill set that allows you to manage assertively. It's this skill set if you open crude, the existing opened ES is getting closed. Well, it's not getting closed, it's disappearing, Racha. So if you can't see both at the same time. You can switch between them, but you can't see both. When I switch over to crude oil, S&P disappears. And then when I switch back to the S&P, crude oil disappears. If you want to see both crude and the ES at the exact same time, then you're going to have to build a workspace that has both open at the same time, that has charts for all of them in one. Unless you're so good, so don't close them. I think that's what you're doing. Are you closing Let me find mine. So workspace, you want to go to crude oil. Are you closing the S&P? No? Because if they're both loaded, it should be no worries going back and forth. And I can do it like this. I can go File, Workspace, Nexgen Crude, and it's already loaded. Everything's already there. And then when I'm going to go back to S&P, I can go File, Workspace, back to the S&P, and it's already loaded. If it's not loaded yet, it may go back and forth. And then, of course, and maybe there's another chart. So, Gixam, thank you. By default, Racha, watch this. Untitled. NinjaTrader 7 will create an untitled chart. And when I click OK, that's what my untitled chart looks like. So if I am opening up crude and I use that Shift 3 to toggle, it goes to the S&P and then it goes to my untitled where there's absolutely nothing on my screen. So I always close that one out in the beginning. And then guys, of course, if you're running into a problem that we can't fix instantly in the room, I want you to remember that you have the absolute greatest tech guy in the world through Jason. Don't be afraid to reach out. No worries. Guys, I'm going to take just a second. I am all sorts of dehydrated right now, so I'm going to go load up. This is crude oil. If your rules are met, take a trade. If they're not, don't. And if you have a question, post it in the room. I'll be back in just a minute. Let me mute real quick. Be right back, guys. I don't know about you, but I'm having fun. All right, class. Price reached resistance and none of the trigger lines were able to break through it. What do we call this area? What do you guys think? Brand new users, if price reaches an area of resistance and none of the trigger lines break through it, which rule has not been met? Are you guys comfortable with that yet? Price reaches resistance. No trigger lines are through, guys. This is a termination condition. This is an area, right? No clear path, Sam. Perfect. This is an area that may reverse the market. If nothing else, it sure is creating a bounce, right? What's happening in the S&P right now? Well, that area broke, right? Man, you guys called this trade all the way back here. Holy smokes. Nice job, everybody. All right, I want to go through something. So, new users, 30 days. Let's focus on entries, right? Let's focus on the absolute best of the best. And Sam, you and I are also going to talk about how to manage assertively. So I don't want you to think that I'm leaving you out here. Okay, I'm going to open up this right here, guys. And this is how to define your entry. Brand new users. Everything you need to define a high probability trend trade entry. Make it yours. If you're brand new with me today, I want you to take out a piece of paper and I want you to write on it, or open up Word and write on it. My trade is the high probability trend trade. And to enter this trade, I must have the conditions of a checklist met. And guys, I'm even going to give you the checklist. And I'm also going to give you this one. I'm going to give you this example plan. I want you to steal it, to liberate it. Make it yours. I must have the conditions of this checklist met. I must have strong triggers. I must have no termination conditions. And I must have an area of support or resistance inside of favorable large triggers. 3 simple rules, right? Guys, congratulations. You just identified your perfect entry. You have a checklist for it. I just put one in the room. I put one checklist in the room that you can print out. Let me find it. Where did it go? You can print this one out, guys. Put it on your desktop. Am I following rules every time I take a trade? Am I always taking the correct trade? Do I have the advantages in place? And then because I'm kind of an overachiever some days, I gave you the exact same checklist, but I stole pictures from the manual. This is what it looks like when those rules are met. So guys, both of those were just put in the room for you. 30 days working on entries. High probability trend trade. Is everybody with me on that? Not in 30 days becoming the world's greatest trader. Not in 30 days managing assertively. Not in 30 days catching every move of the market. For 30 days learning how to enter the market. Learning how to find that best of the best entry. Because what happens when you have the best of the best entry? It becomes easy to manage. It becomes easier to make profits. Because you begin to believe in these advantages after the first 30 days. Guys, remember we said the path is taking pictures. Take pictures of your best trade. Let's see what this one looks like, straight from my plan. Whoa, that's huge. But there's a 13-2. There's strong triggers. Small's below the large are wide, they're angled in the direction of the trend. Look at that entry on the tail. No termination conditions. If I take this ginormous picture over here, you can see that my entry is right at a pullback to an area of resistance inside of favorable large triggers. I've identified my best of the best trade. It fits the rules completely. So I'm putting a couple pictures into my spreadsheet, guys. We talked about taking pictures, taking spreadsheets. This is it. Your entire first 30 days fits on a third of a sheet of paper. Your entire 30 days working on entries is this simple. And then we said that you're ultimately going to take medium probability trades, right? What's the first one? The first one's going to be that 50-50 trade, where an area is likely to break. It has the potential to break because of the momentum, but it hasn't broken yet. As you add this medium probability trade, you're still working on your ability to manage. Smalls are below the large are wide, they're angled in the direction of the trend. Guys, for me, on a medium probability trade as a brand new user, I want my entry to be perfect. I want no divergence on the 5-1. I want a tiny window of opportunity. I want strong triggers. This creates the best advantage on an area that hasn't yet broken. And Sam, how do you manage it assertively? If you take the best entry and divergences start to print on an area that hasn't broken yet, you can remove the risk. You can take profits at the trouble spot. You can use that smaller chart to help you identify change on the larger chart. And that's your first 30 days. Guys, give me a Y in the room, please. For 30 days, if all you focus on entry, what's it going to teach you? It's going to teach you to understand where the market is likely to continue, where it's likely to stop, and where it's likely to go. During this first 30 days, as you take these entries, it's okay because you're brand new, but you're not going to have the repetitions. You're not going to have the chart reading to manage assertively. You're not going to have the chart reading to recognize change in the moment. So this is a very mechanical plan that a lot of new users like to use. And it simply says I will trade 2 contracts. And my initial stop will be 12 ticks. It'll be adjusted below or above the window of opportunity. I'll move it below or above the reversal bar in the direction of my trade. No room for chart reading, no opinions, no anxiety, very mechanical. I'll take profits on my first contract at 100, move to break even. Second targets will be 200. Guys, this is the most mechanical approach to management that I've ever seen in my life. I share it with you guys because it keeps you from focusing on anything other than those best of the best entries. And here it is in pictures. Yikes, I have to make that smaller. If my entry is at the area of resistance inside of favorable large triggers, my initial stop is above the window, my targets are predetermined, right? And there it is, right there, written out, highlighted. I'm going to give you this one. You can steal it, you can save it. The second part of this very mechanical management plan says that my stop will be moved ticks above or below the reversal bar in the direction of my trade. There it is. There's my new stop. The only thing I have to do. There's my entry price. My targets are the same. And there's nothing to do now. I'm either going to get stopped out of my trade or my target gets hit. That's it, guys. No opinion, nothing. The only thing that we were really worried about is nailing that entry for the first 30 days. Then it says I'll take profit at $100. There's that first target hit. I'll move my stop to break even, and then guys, I won't move my stop again as a brand new user. Either my second target is hit or I'm stopped out break even. And then depending on what happens, this one happened to go straight to our second target, and I'm out of this trade with a $300 winner. So I've got initial risk, I've got the perfect entry, I know where I'm going. I've reduced my risk, I know exactly where I'm going. My first target is hit, the dopamine kicks in, I'm break even, I'm not scared of losing, I've already got money in the bank. And there's $300, and it all revolves around taking that absolute best of the best entry. And then as you grow with the software, and Sam, this one's for you. Let me take a picture of this real quick, guys, because we're going to talk about that gap theory again. And that's a good one. So let's go back to the instructions. Let's go back to termination conditions. And we're going to go to those 3 divergences. When I learn how to read my indicators in the moment, it says on a medium probability trade, I'll manage assertively. So Sam, if you enter at the area of resistance inside of favorable large triggers, and you've already had one loss of momentum, good morning, Ed. We can identify trouble spot, right? You see the blue fib. A second divergence print, Sam. At this point, if I'm holding for longer moves, everything still says down, smalls are still out, right? How do I manage assertively? When that third divergence prints, Sam, and you're going to see this in the moment, you can exit a trade. You can get out before you lose money. You've identified the trouble spots. You've seen change happen. So what happens is once you learn these entries, you can start focusing on managing them. But until you learn how to manage them through chart reading, you can use a very mechanical plan to keep you in place. All right, guys, we're going to go through. Let's start looking at your pictures from today. We've got quite a few of them. I'm going to scroll up to the top. And I do believe Gary got us going today. Let me look. A lot of pictures today. I like it. Guys, keep posting these things. I want you to know that as I go back and I look at your pictures, I can't see what you're writing at the bottom. So I'll scroll back and forth a little bit. But Gary, smalls above the large are wide. They're angled in the direction of the trend. You take the pullback to support in the mid-band inside of favorable large triggers and take a pretty effortless win. Guys, I'm going to steal Gary's picture because it's a perfect high probability trend trade. And I'm going to open up my spreadsheet and I'm going to put his picture in my spreadsheet. This is 100% rules met. I want to come back and study it, right? I want to come back and take a look at it and make sure that I can do exactly what Gary did. Everything says down. Love this one. Entry at the area of resistance inside of favorable large triggers. Easy money. Gary, you're adding to your plan. You're feeling left out because you see other people do it. It's just a momentum style trade. Doesn't use any areas. Doesn't really have any room to get back to the trouble spot. Guys, this is the second half of what we do. Smalls above the large are not wide and angled in the direction of the trend. Gary recognizes it and he says, you know what? No trade for me. Not yet. Rules met. Gary, great job recognizing conditions and following rules. Safia posted in the room. I love seeing more of these. This is post news, right? From a good bottom. Yeah, there's that termination, creates the reversal. Odds favorable. I like it. No termination conditions. Safia, we're kind of into resistance. And the trigger lines haven't gone through yet. So we're trading into trouble. But because you take the perfect entry, it allows you to manage through, to make those quick profits, get out at break even, and then everything heads through, and then there was your next opportunity. Safia, very well done. Great trade. Good recognition. You are trading into trouble, but that great entry, and this goes back to what Sam was saying, what Paul was saying, great entries make it easier to manage trades. Here's your one issue. Perfect entry, perfect management. Nice job. All right, I'm going to scroll back up. We're going to find the next one. Guys, a lot of feedback in here. I appreciate that. And Zeba, I haven't forgotten about you. You were asking about moving stops and stuff. And just remember, Zeba, it's going to be easier once you have the software in front of you. But we'll go through it today for everybody. All right, NG time. I'm trying here. Whoops. Goodness gracious. NG time. I'll open up that link. Here we go. Termination creates a full reversal. You take a pullback to support. Right here at 60, I see the tail. Same one Safia took. Great job taking it all the way up to where the market should go. Nice trading, NG. You and Safia both are in cahoots, apparently. Taking those great entries so that you can manage the trades. And getting out with divergence. Man, way to get the most out of that trade. Absolutely beautiful. Gary, divergence and weakness. Smalls outside, everything down, odds favorable. No reason not to stay in that trade. I think you recognize that. Good job. Let the 13-2 lead the way, guys. This is one of the greatest lessons that I ever received as a new trader. Let the 13-2 lead the way. And let's look at this picture. And I'm not picking on Gary, because Gary can read a chart as good as anybody. What's the momentum say? And I'm only going to take a picture of the 13-2 here. And guys, new users, I want you to work through this with me, because it's a great lesson on where to focus your attention. Direction is down, right? Gary, it can't be anything can happen strong. Those are two different things. That's like going, this is an orange banana. It's either strong, small's outside of the large, or it's anything can happen, small's inside of the large. So guys, strong down, right? Strong down, no termination conditions, trading with the trend, all of these advantages, Gary. So then we have to ask ourselves, with all of those advantages, am I going to let one little line be that reason that I get out? You got in after the divergence. You didn't get a second divergence. You had a tiny little stop. This is where we start to trust, guys. This is where that repetition develops trust. This is where seeing it's broken support, you would think momentum is changing. And D, you just used the most dangerous word for people that should be reading indicators, right? You either have momentum or you don't, right? How do we identify momentum changing? When it rolls back inside. So D, just because an area breaks, here we see it right here. Area breaks, odds favorable momentum, and it continues. Area breaks, tail into momentum, and now we have that loss. Do you see how that works, D? We don't have to think that it should slow down because an area broke. We can identify with those trigger lines whether it has or has not. Pretty cool, right? And let's see what that looked like at the tail end of momentum. There's an area of resistance right inside of favorable large triggers. Absolutely. So these trigger lines let me know. Now I'm losing momentum at the bottom. Do you see it? A couple divergences. It can still go down like it did, but I started to get the indication that things may be changing. But I don't control the market. All I control is when I have this look, when I have this amazing advantage, man, that's when I have odds favorable, when I'm the most comfortable, when I have the best advantage of momentum. And that's where, as a brand new user, D, I look for my trades. And then let's go to where those anything can happen triggers are. Whoops, that thing's moving. I have anything can happen. I don't even have areas inside of favorable large triggers. This is where we realize that our rules aren't met and there's just no trade. One of the most expensive words in day trading is I think. I think the market's going to go up here because of a blue line. I think the market's going to stop going down here because of a blue line. So just, I like to say trade what's happening or what's happened. The momentum has been established, right? The termination condition has been cleared. And now this 5-1 is nothing more than an entry chart. And I think that's the part that people forget, is that the 5-1 is only looking for an area to get in when the advantages are met. Does that make sense, guys? 13-2 leads the way. 5-1, we're just getting in. And unless we get those 3 divergences with the trigger inside, I don't care about the 5-1. I like to focus on my 13-2. And then, Gary, there's a termination condition. Not taking a trade into the termination condition. Nice job. Good job following rules. And this is what we do in class. We're going to talk about what you see, right? We're going to talk about what you did. And if I can offer anything to help you do it better, I'm going to do that every day, 15 hours a week. Gary, loss of momentum on the 13-2. Loss of momentum on the 5-1. You enter at the area inside of favorable large triggers. And then you get stopped out, giving away the advantage of momentum, taking a small loser. And I'm scrolling. Guys, one of the reasons Gary can read charts so well, look at how many he posts. Everything is above support, not looking for shorts. And Gary, you put flat triggers, no short. I'm saying termination conditions, no short. I don't have a rule for flat triggers unless it's on the entry. They should be strong in the direction of the trend. But 2 termination conditions, fibs and 1-to-1s in there, right? That's okay, Gary. You took a shot. You gave away the advantage of momentum, and it did very much what we expect to have happen without that advantage of momentum. It's okay. Losers are a normal part of a positive equity curve, guys. Everything says up. Rock star entry at the 1-to-1s. Quick profits. Confidence level because Mark said so. I don't know what that is, but I like it. Nice job, right? Every advantage. Every advantage and the perfect entry makes it easy to manage. Great job, Gary. Great entries provide easy management. Not the strongest look, but all the triggers are through those Fibonacci areas. Below the areas, Gary, quick profits. Lower probability trade, but that great entry, you're willing to risk a couple for everything to continue up. Nice job. Hey, Racha, did you get your stuff to open up? Same thing. Paul says, I have everything going through and nothing in the way. He takes a great entry right at the mid-band. It's a little bit below those areas, so he manages assertively. Quick profits, zero loss. Paul, I hope that one went the distance for you. Same picture. Every day, guys, this is what we do. There was your entry. Quick profits right at the trouble spot. Lower divergence, get out. Absolutely no harm done. Paul, beautiful management on a nice medium probability trade. Gary, same trade. You wait for market flow confirmation. Guys, when you take a medium probability trade, Gary, waiting on that confirmation gives you very little room. Okay, Racha, great. Gives you very little room to manage back into it. I mean, you did a great job. You got in, but you made like a tick or two, right? You knew where your trouble spot was. Oh, no, not yet. Everything's still set up. You got in quick. I love a little confirmation, and we'll talk about using other charts for confirmation if you guys want to. But there's a cost, isn't there? There's certainly a cost associated with confirmation. And then Paul says it's a termination condition that creates a full reversal. He lets all of his trigger lines roll, taking a momentum style trade. And as long as that stop is behind, Paul, one thing that I notice is that your large triggers are still up. So I like it. Getting in, managing assertively, letting those smaller charts roll, the smalls below. Perfect entry, great stop placement. Nice trade, Paul. Textbook, utilizing good tops. And the market goes right to its first target, right? Right to the mid-band, right to support. Beautiful. What a great trade. Dave B, let's see what you got. Yeah, and Ed, when you get 3 or 4 fibs on every chart, it sure makes you feel good, right? Sure makes you feel good. And Paul, I keep an eye on not so much when it's a great top like this. I mean, this looks good, doesn't it? I look at where they are in relationship to the area. Notice how you're larger below the area of resistance rather than above. For me, that's big. Like that just adds fuel to the fire for you to take that great trade. Yep, 3 divergences in the same location, at resistance with absolutely no triggers, smalls below the large below the area, all your trigger lines roll. Paul, we could talk about advantages on this trade all day long. Nice job. All right, and then Dave B, you had the question, does all the bar have to be below the termination condition to say yes to rule number 2? I love this question, Dave. All the bar, right? So let's go back real quick to termination conditions. Are you with me, Dave? Cool. So there's a 2-part process to identifying termination conditions. The only one that involves price is going to be price reaches an area. So when the price bar reaches this area of support, Dave, that's my only concern about price. Price reaches an area. Same here, price reaches an area. And then it goes into where are the trigger lines. So it's not a matter of looking at the bars. It's a matter of looking at the trigger lines. If the trigger lines remain above, it's a termination. Trigger lines remain above. Up here, it's a termination. And then Dave, when both the small and the large break through completely. Small and the large triggers, not the bars, then we have a clear path. Because you'll notice right here the bar is all the way through, right? But those large triggers are still above. Does that make sense to everybody looking? The bar made it through, but my large triggers are still above. This area is not broken yet. Guys, this is one of those 50-50 looks, and that 50-50 look continues all the way down to about this bar, where the smalls break through, but the large don't. 50% of my trigger lines are through, 50 are not. This is an area that hasn't broken yet, Dave, until all of the trigger lines get below it. But this is an area with the potential to break because of that momentum. So if we go back to your picture, the small triggers have broken through, but the large triggers are not. So what we have is an area with the potential to break, but it hasn't broken yet. And then when both the small and the large get to the other side, then the area is considered broken. Does that make sense? Great question. Price will tell us that we've reached the area. Triggers will tell us whether or not that area is considered broken. You're welcome. That was an awesome question. Guys, the more questions you guys ask, the better this class gets, I promise. Earl, let's see what you did, my friend. You have a reversal in the market, and then price reaches support. Absolutely no trigger lines break through. So Earl, you're trading directly into a termination condition, right? And you don't really have any areas inside of favorable large triggers. You get away with one here, I think. Area likely to stop the market. And do you see the look where the large triggers are in relationship to that reversal bar marker? I want to say that I took a picture of that before we took a break. That may be it right there. And then Earl, this is our gap theory, guys. Remember when price accelerates away from those large triggers, reaches Fibonacci support, resistance, and those large triggers, are a full bar away. How do we know they're a full bar away? Because they're above that reversal bar marker. Guys, this tends to act like a vacuum, and any short trades taken before price snaps back more often than not get run over. So when I look at yours, Earl, you certainly had some troubles coming through, and you did have that gap theory. And you notice that price pulls all the way back to the gap, right? Right there at 68. So I'm going to say great stop placement. Great stop placement, but you've definitely reached an area likely to stop the market. And then Paul, woo. From 22, 67. So weak triggers, weak triggers. You said, you know what? I'm willing to miss that one. I like it. I don't disagree. It might go, right? But you're giving away the advantage of momentum. Guys, you studied hard to recognize that advantage. Oh, you took it. Why did you take it? Weak triggers, weak triggers, weak triggers. You got a signal from an area that's not inside a favorable large trigger, so you went. All right, Paul, stepping outside of those rules a little bit, right? Letting that potential clear path as it pulls back to the area, waiting for the market flow. I don't think you got lucky. I think you gave away the advantage of momentum. Because you gave away the advantage of momentum, you embraced the advantage of a clear path. You embraced the advantage of an area likely to stop the market, guys. Isn't this, let me make this bigger real quick. Whoops. But just based on termination conditions, Paul, can't you say that this fib is likely to stop the market because all the trigger lines are below it as price returns to it? Rule number 2, right? I like it. Guys, I never try to knock I like to point out potential problems, and I like to point out potential advantages. So we have an area likely to stop the market, an area likely to stop the market, there's an area likely to stop the market, and there's an area likely to stop the market. So Paul waited for a market flow confirmation signal to say, you know what? I'll take this trade. His risk is already defined because of the signal. And after the signal, he takes a little stab back to the fib to get a better fill. I love that. Paying half price for confirmation, quick profits, trouble spots. Paul, perfect execution on a trade that doesn't have that odds favorable momentum. I'm not going to beat you up for that one. I think you did that one as well as anybody could. Joel F., let's see what you're doing. Good morning, Joel. Smalls breaking through, odds favorable, everything says down, smalls outside, picture perfect entry, just a little bit low, quick profits, second profits. Joel, great read. Termination creates a full reversal, gives you odds favorable, area with the potential to break, great entry, makes a manageable trade. Joel, that's what I'm talking about. Every day, right? Embracing advantages. When they're there, take them. When they're not, leave it alone. I sent a picture yesterday to somebody. Did a lot of talking on Skype yesterday, which is fun for me. Talking about what we see. I talk to my brother for hours and hours every day. And the one realization that every trader has, let me see if I can find the picture. I take a lot of pictures, guys. But the one truth that every trader has to come to at some point to really start moving forward is this one right here. The hardest part about trading isn't reading your indicators. The hardest part isn't recognizing advantages. The hardest part of trading is sitting on your hands when your chart reading says do nothing. What do you think, guys? Do you agree with that one? The hardest part is saying my rules aren't met. I won't take a trade no matter how bored I am. 50-50. Paul says this is an area likely to break, right? Not the best look. It's slowing down. 2 divergences on the 5-1. So what's Paul looking at? Area with the potential to break but hasn't broken. 2 slowdowns, small triggers inside. Look for a big kick. Picture perfect chart reading. He gets his big kick. Not his trade, but there is a market flow signal at an area likely to stop the market. Paul, that'll be your trade one day. Great job. Great read and great patience. Sam, do you see how he let smaller chart divergence, trigger line location, keep him out of a potential problem? This is the same way that you'll manage assertively if you took this entry here. Pretty cool, right? If Paul decided to get short with 1 divergence, 2 divergences, triggers inside, would have had him out of that trade for zero loss. The signals didn't push it down from the fib, Paul. You know what happened? Is price reached resistance. All of your trigger lines remain below. Large triggers didn't even blink. And I'd bet dollars to donuts that your 21-3 chart had odds favorable momentum to the downside. Great reads, Paul. Great chart reading today. Safia, let's see what you're doing. Guys, does this help new people looking at what other people are doing? Because we do this every day, right? Every day. Safia is asking, Mark, there's strong triggers in fibs and mid bands, 1-to-1s, but no reversal bar. Can I take a trade? Safia, are you asking me if it's okay for you to break your rules? I just want to be clear. Are you seeking permission to break rule number 3? Are you saying, hey, Mark, the market's... But that's my Sunday school answer, Safia. If you don't get a pullback to an area inside of favorable large triggers and you're a brand new user, follow your rules. 2 choices, right? Rules met, rules not met. C to air. Is there something specific you'd like to know about market flow indicators? Because there is probably 1,000 hours worth of information. Was there something specific? I'll give you my remedial, and then let me know if that answers your question, and then if there's something beyond that, for sure. But yeah, Safia, just stick to the rules, right? If your rules provide an advantage, and then Safia, I'm going to give you the second half of that answer, okay? In the beginning, your rules keep you typically on the winning side. They give you all of those advantages. But Safia, don't you think there'll be a time where you see this so many times that maybe you take advantage of the momentum, that maybe you find an area for entry? So in the beginning, follow your rules. But understand, everybody, your rules are going to grow as your ability to read charts grows. What you see today will not be what you see next week. What you see 3 months from now won't even resemble what you see today. So keep it simple, form that solid foundation, and it's going to grow. Gary, you say big move down, large entry window. This is the run over scenario. Absolutely. I agree 100%. Gary, it doesn't make the area straight into resistance. And he's talking about a big window of opportunity. Gary, can I use your picture for a great lesson? What does Gary mean? Huge entry window. Well, if you're looking for an area inside of favorable large triggers, the top of your large triggers are here. The bottom of your large triggers are all the way down there, right? Does everybody see that? That split triggers? That means that your lowest point of support is at 41.19. Your highest point of support is all the way up here at 23.75. Guys, that's a 4.75. Almost 5 points. Area window of opportunity. Does that make sense to everybody? And if I get in up here, doesn't my initial stop have to go below that window? 6 points below. Does everybody see that? Give me a Y in the room if you're with me. Why do we want those triggers one on top of the other? Why do we want that consolidated area? Because at this point, your risk is over 6 points. Is there anybody in this room willing to put $300 of risk per contract on an area that hasn't even broken? On an area that has the potential to break but hasn't broken? No. Good answer, D. Not you? Good. One day you might, right? What if this was Fibonacci resistance on 5 different charts? I might be more inclined to take that trade from the top of the window. But man, this isn't even coming from a key Fibonacci area. This probably had 3 divergences down here and pushed it up. Great read, Gary. Nice job on that. Ron C., always nice when you post. Odds favorable momentum. In after the trouble. Out before the trouble. Safia, here's your answer. Ron C's done an awful lot of work for this style trade, letting the areas clear with odds favorable and getting out before that next area is hit. Gary, that one you took this morning, there's your management lesson for it. Don't hope stuff breaks. Get in, get out, make your money. Move on to the next one. So Safia, one day this may be your trade when there's no pullback and everything says. And Ed, you try to find common ground on multiple charts. When all charts agree, right? When all charts are strong, when no charts have anything in the way, everything's the same color. When everything agrees, life gets easy, guys. When everything agrees, I really feel as though your ability to make money goes up exponentially. 50-50, right? 50-50. Area with the potential to break hasn't broken. Two divergences tell me we're slowing down. And look what it does. Small's above the large are wide. They're angled in the direction of the trend. Got a 2-tick window of opportunity in the event of a pullback. Everything we do is repetition, ladies and gentlemen. Waylon, directly in determination conditions. Looks like you got away with one. Yep, your biggest problem is patience. And then you absolutely nailed this one, right? Let everything clear. Waylon, I know that you're going for that same momentum style, similar to Ron's. This one doesn't give you a window of doesn't give you room to the target. This one does. Very different results, right? Or did you go long here? Nope, you went short, and you're able to make money. But why not have a clear path? Give yourself the advantage of a clear path, guys. Safia, sometimes it goes without us. Great top, full reversal, odds favorable, no divergence, tiny window of opportunity. Some of you might have taken a medium probability trade here, right? Maybe taken a loser on it. Just wait for the best. Wait for the best. You don't have to be first. Guys, I'm going to take just a minute. I'm going to go reload my water once again. If you take a trade, let's go to crude. They've got we'll watch it as we go through. If you take a trade, guys, post it in the room. If you have a question, post it in the room. C to air. I'm going to talk about market flow when I get back, guys. I put a big note on my notepad here. So when I come back, we're going to talk a little bit about market flow. Do me a favor. If you take a trade, take a picture. If you see something happening, you're not sure what it is, take a picture. If you've never posted a picture, take a picture of my charts. Tell me what you see. I'll be back in just a minute, guys. All right, guys, here we go. Home stretch, last hour. Ed S., you know that I have to do it, right? Ed says third divergence prints lower than nice top. And I love this. And guys, the longer you're in this class, the more I feel like I know you. I get comfortable with people. I want to show something. It's easy to say, hey, look, there's a red line. Hey, look, there's multiple divergences. The third one was lower. The smalls are inside. And say, I'm going short, right? Nexgen users, you have this amazing advantage. Let me find my picture. There's two ways to trade. Thank you, Paul. Giving it away, right? There's two ways to trade. You can trade what you think is going to happen, and you can trade what's happened. And Paul just gave away the plot, right? I know you wouldn't, Ed. But new users, and I like that you did that, because new users will say, look, there's resistance, and I don't have odds favorable, and there's three divergences, and this market's going to go down, and they go short with everything still pointing up, and they get stopped out. They're like, but that red line was supposed to hold, and they go short again, and again, and again, and again. This is trading what you think. I think resistance will hold. Over here, when resistance is held, just like Ed and Paul said, when those trigger lines roll, when the small are on the right side, guys, you notice that this price, full of opinions, is the exact same price with confirmation. And the difference between successful day traders and guys struggling to stay afloat is being patient, waiting for that roll that keeps you on the right side of the fight. Waiting for that roll. Telling yourself, where's that picture again? That there's nothing to do, so I'm going to do nothing. So, Ed, I like that you put that. And it may be a top, right? Look what happens. We don't control the market. Now the triggers roll. How far away are those large triggers, guys? Anybody but Paul, because Paul studied this one extensively. If price reaches a mid-band, if price reaches fibs, and these large triggers remain above the reversal bar marker, that's that vacuum scenario. This mid-band is acting as a termination condition. Price is likely to suck back to it, right? Slingshot. And where are the large triggers compared to this area that we thought might break? They're still above it. It may pull back. It may not. But at least we can recognize a pattern that gives us an advantage, right? We can recognize a pattern that helps keep us safe and on the right side of things. Does that make sense? Probably a little overrun. Or, guys, this is a 21. This is one up from the 13 too. Ed, was it overrun? Or was it just a nice bounce point? Large triggers remain above. We'll see. We'll see what happens. I don't know. I don't have any rules met right now. My mid-band is acting as a termination condition. Price is likely to close the gap back to those large triggers. The large triggers haven't made it below that area of resistance yet. All right, now the gap's closed. One expectation filled, right? You don't have your chart. I don't know. Market flow right now. And this will be our segue into market flow, right? Market flow said don't do a darn thing unless you were going to take a quick shot at 35. But I don't have any rules into a termination condition with higher divergences, with smalls up so strong, right? Guys, it's Sometimes 90% of the time is waiting for the market. C to air, are you with me? We had a question about market flow. I want to make sure you're here. Awesome. So let's do this first, okay? And C to air, are you comfortable? And this is for everybody looking to add market flow. Are you comfortable with your rules? Do you know what you're looking for to get into a trade? I had someone ask me yesterday, why don't you teach that, Mart? Well, because if you don't know the rules, market flow is going to get you in a lot of trouble. So I'm going to go to market flow, the volume analysis, and I'm going to direct you, of course, watch the video. A lot of people watch the video, they want a little clarification, and I love to do that. So market flow charts initially, C to air, use it for confirmation. I'm going to go through a chain of events. The first thing I'll use a market flow chart for is, watch this. I can take a market flow chart and I can use it for a momentum confirmation. Do I have odds favorable momentum as I'm looking to get into the market? Does that make sense? This is your first. I know my rules. I'm going to confirm momentum. That's the first thing I use it for. When I'm comfortable identifying it, all of my rules are met, I'm using it for momentum, I can start putting more indicators on it. And then I'll use it as a confirmation tool. Let's let that come up real quick. And I'm going to show you what I mean using it as a confirmation tool. When my rules are met, C to air, when your trend trade rules are true, when that termination for the HVA is true, I'll let market flow give me an indication, whoop, that's going to take a second, that the area may hold, meaning that I probably have something in the way. Maybe it's a 50-50 trade. Maybe I'm trading into a potential termination condition. Everything is true, but I'm not 100% sure if I feel good about the trade. Well, then I can use market flow to help me identify a potential entry. So I want to see where this circle lines up at 11 a.m. All right, so it's this circle right here. So let's say I've got a termination condition, creates a full reversal. Guys, this is a termination condition above me. It's not a real trade. But hypothetically, C to air, let's say that your rules say, man, I really think this mid-band is my place to go long. My triggers are rolling. My large got above. Everything says go, but I'm not sure if it's coming from the mid-band, and I'm not sure if it's coming from support. Are you with me so far? Your rules are met 100% per your plan. So you say, I'll take this trade, but only after market flow gives me a signal. And you can see from that area, there was a green arrow, right? Your rules were met, but you need confirmation of the area. So you wait for confirmation. You wait for a yellow reversal bar or a green arrow for the long, or you wait for an antenna bar right from the area. You can use it as confirmation like that. That's going to be the second way that you use market flow. It's still just a confirmation tool. Use it to confirm momentum initially. Use it to confirm the area when your rules are met. In C to air, that's really where most people kind of pump the brakes on using market flow. Because what happens is you'll begin to create trades. So always going back, your rules are true, and then there's a lot of pictures of what it looks like. Looking for a green arrow for longs. Looking for a magenta arrow for shorts. Looking for the yellow reversal bar up for longs, down for shorts when the rules are met. Looking for antenna bars, bullish antenna bars for longs when the rules are met. bearish, I mean they're going down, antenna bars for shorts. So C to air, what I like to do to learn it, and I hope this helps a little bit, is follow your rules, right? Follow your rules. And then when your rules are met, so let's say we're watching the S&P. And this was a 50-50 trade, and this trade had divergence. So let me circle that, right? There was divergence, 50-50 trade. Let's go back and let's look. Some people will say, I'll wait for market flow confirmation. Two divergences, rules probably aren't met. What did market flow say at that area? Well, market flow gave one opportunity, but you notice how the momentum isn't confirmed? One signal right there, and then you had to manage out with the higher divergence. Does that make sense, C to air? 50-50, one divergence. Your market flow signal came from right here, but you wouldn't have been in until 19-ish. And then once this higher divergence prints, your rules aren't met anymore. You have to be able to manage out of it. So there's a cost to confirmation for sure. And that's really what I'm using it for. And that's what people use it for initially. 50-50 trade with divergence, they'd use it for confirmation at the area. I like to use it for momentum confirmation because I don't take 50-50s with divergence per my super conservative learning the software. Does that help a little bit? And then, of course, you can continue to grow C to air. What's it look like at a good top? What's it look like at a good bottom? What's it look like at areas likely to stop the market? So as it came down to this mid-band and the large triggers were so far away, then I start to study. I say, well, I know that the mid-band's a termination condition. Was there any indication, maybe later in life, any signals from that area that maybe help me take advantage of that snapback? Well, look at that. There's a reversal bar, there's an antenna bar, and it pulls right back to the area. So maybe you begin to add trades based on patterns where rules are true, expectations have been created. And that's a little more aggressive, a different kind of approach to it. So hopefully that helps a little bit. Start looking at what is it telling you at key areas. Whether it's the key area of an entry, whether it's the key area of a potential termination condition. What's the information? So that's how I like to go into market flow at first. It's something that takes time. Paul, you said now they rolled but no entry. Yeah, and you're still into a mid-band with large triggers above. We got to see that one. Great picture, though. Absolutely. C to air. Any questions you ever have. Guys, nothing's off limits in here. If you're wondering about something, put it in the room, especially for the last hour. The last hour, you guys get to drive the class. So, Joel, would I please help out on when divergence prints when in a trade? So from a management standpoint, Joel? Taking that next step, right, Joel? Yeah, cool. So let's do it. And let's go back here where that market started to turn. Maybe not a good one. Let's go to the instructions. And I'm going to go to termination conditions, Joel. Because I really think that this 3 divergence scenario is one of the best. So I'm going to scroll down because you're comfortable with the entries, right? Cool. So let's do this. Let's just highlight this one. Oops. And I'm going to turn this into a nice little lesson for us. So I'm going to Almost there. Whoops. Drunk fingers. All right, you ready? And Sam, this is for you too. Hypothetically, of course, because this picture's from months ago. So hypothetically, Joel, your rules are met 100%, and you've taken an entry at this area of resistance inside of favorable large triggers. Why did you take your entry? Because even though there's divergence, you still have odds favorable momentum, right? Small triggers are outside of the large triggers. The large triggers are wide. They're angled down. You have a very nice window of opportunity. Maybe this is a 50-50 trade. Is everybody with me on that? You guys are good at this. You can identify this entry point. So on a medium probability trade, we're going to manage assertively. What does that mean? That means that if I don't have a clear path, if I don't have odds favorable momentum, I'm going to let my 5-1 begin to give me information. So Joel, you're in the trade, right? And you're looking for a home run, everything. And then a second divergence prints. What's the rule on termination conditions on the 5-1? It's 3 divergences, right? So when a second divergence prints, this is number 2, where are your small triggers? This is the first question I ask myself in relationship to divergence from a management standpoint. Joel, where are your small triggers? Are they inside or outside? They're still outside, right? So you still have odds favorable momentum. Cool. So 2 divergences, odds favorable momentum. Is there any reason to believe, with the rules still met, that this area of resistance inside of favorable large triggers isn't just a fantastic area for a potential short? Do you see it? If all you were looking at under 13.2, clear path, no termination conditions, that would be another entry. That would be an add-on point. That would be your second trade. That's a rules-based entry. So then, Joel, you're in the trade still, right? Let's say that you took your initial stop. From here, you're like, I'm going to let this one run. I already took profits. Do I have a money sign? Nope, I have a trophy. I already took my first profits at that first trouble spot, right? I've got that divergence low. Everything says down. I'm going to take some money right there. And then I'm going to let this second contract run. Small triggers are still outside. Everything's still down. Still have odds favorable momentum. I'm just going to move my stop behind this pivot. I'm probably break even and a tick. I've got absolutely nothing to lose, and I'm looking to hold on for that next area. Make sense? Why did I decide to hold on? Because my smalls are still outside of my large on that second divergence. Well, then I get a third divergence, and my brain starts with the alarms. 3 divergences in the same location can terminate a trend, right? And when does it become more powerful? When the small triggers are inside of the large. When I go from odds favorable to anything can happen. Joel, Sam, are you with me on this one? Do you see the difference? 1 divergence, odds favorable. 3 divergences, potential termination condition, becomes even more powerful with the smalls inside. And right here on this third bar, that divergence is true. Because you read your indicators, identified when that third divergence prints, you said, you know what, I'll take my money. I'll take my money and I'll wait for that next perfect setup. Small go inside the large. Yep, they go inside right here, right? But Sam, we're not looking. We're looking at the relationship. Where are the small when the pivot is formed? Do I have odds favorable momentum at the time of the pivot? Absolutely I do. Cool. Great question. And now look at this pivot. Now they're inside. Outside, outside, inside. 1, 2, 3. I'm good with that, with the rules met. Now my small chart's telling me that we may push up. Does that help a little bit, Joel? Sam, does that help a little bit? Awesome. And then let's just look. Sometimes it'll keep printing divergence all the way down in a move, right? And those triggers will be inside. We don't control this. This is more of an anomaly. But notice how divergence prints, triggers break. Same thing like a termination. Divergence prints, triggers break. Divergence prints, triggers break. No different than identifying areas. First divergence, smalls are kind of outside. It tries to push up. Second divergence, smalls are below. Pushes down a little bit more, and the buyers give it one more squeeze up. And it can't even take out that pivot by much, and then the market heads down. So guys, if you scroll back and just look, 2 divergences, the market continues up. 1, 2, 3 divergences, creates all sorts of ugliness until all of my triggers get above that divergence, and then it continues up. And there's textbook, right? Smalls outside, first divergence. Smalls outside, second divergence. Smalls start to roll, third higher divergence. Starts the process. Guys, go back and look at it over and over. 1 divergence, higher divergence, higher divergence. Your large triggers don't even roll until that third divergence. And then things start to head up. I'm a big fan. Scroll back over and over. Scroll back and see what happened to give you an idea of what may happen again. Everything runs over. And now I'm at a 50-50, right? Smalls are below. Large are above. How many areas haven't broken? Am I the only one that counts this? Hasn't broken. Hasn't broken. Hasn't broken, hasn't broken, hasn't broken. All have potential, but haven't. Does that make sense, guys? And I'm only using trigger line location. All of the areas have the potential to break, but they haven't yet. Smalls are definitely outside of the large. And now the trigger lines keep coming down. This keeps coming down. So I start looking. Here's my large triggers, one on top of the other. There's my potential window of opportunity. Do you guys see it? If divergence prints, I may say to myself, not my trade. If divergence doesn't print, I might say I'll take a shot at an area with the potential to break. That's up to you. Only you can decide whether or not you're taking trades with divergence when they're 50-50, when the areas haven't broken yet. But do you see how easily it is to identify where the market's likely to continue? how rapidly that happens, the more repetitions you get, the easier it becomes. Guys, we got about 30 minutes left. What would you like to talk about? Ziba, you had a question about moving stops, is that right? I'll show you guys. If I put a limit order in, if I have a stop in, all I have to do is click the line and I can move it anywhere that I want. So let's say I have a sell up here, but my area is down here. I can move it. Maybe I'm saying, well, there's divergence. I want to catch it from the top of the window. Maybe I'm saying I don't want to trade it at all and I want to X out of it. Practice doing these things. Use your NinjaTrader over and over. Bump your chart so that it seems wrong. Knock it out of the way. Where are my indicators? I don't know. Maybe the market's dead. Guys, capital F centers this white arrow, gets you to the most current bar. Hasn't the scenario changed a little bit? We went through 5 areas not quite broken. Now the large are already starting to smash through. We have odds favorable momentum. Everything says down. It's still 50-50. My window of opportunity extends from the lowest point of resistance to the highest point of resistance. It's a 6-point window. Give me a Y in the room if you see the advantage of momentum happening right before your eyes. Everybody comfortable with that? Do you see being able to identify an area with the potential to break, but it hasn't yet broken because the large triggers aren't below it? And even without a reversal bar, is everybody comfortable identifying the areas of resistance inside of those favorable large triggers? Because this is your recipe for success, guys. This is what has to be. Sam, yep, that's outside of your window of opportunity, isn't it? This is your window. Where shouldn't the market go? It shouldn't go beyond those trigger lines, right? It really shouldn't go above these areas of resistance inside. Let's see what happens. We'll talk through it. If it decides to, hypothetically, 50-50, it's got divergence. Not everybody will take these because we have a loss of momentum on an area that hasn't yet broken. But it pulled right back to it. Odds favorable, divergence prints, small outside the large. Initial stop would go where? Where the market shouldn't. The market shouldn't go above this resistance. We'll put it right above the reversal bar. I've given away my advantage of a clear path though, haven't I? Let's see what happens. It's a medium probability trade, not a high probability trade. Where would our profit targets be? If you're in at 77, you have to make it to 67 for $100, right? Have the areas broken yet? Are you guys with me on this? You don't 100% have the advantage of a clear path. There we go. We'll make it the color of money. Everybody with me? Areas haven't broken. They have the potential to break with momentum. Because of the momentum, some of you are willing to get in at the bottom of the window of opportunity. Some of you have that super conservative plan that says no divergence, no loss of momentum, because what am I giving away? I'm giving away a little bit of an advantage of momentum, and I'm giving away a clear path. What do we need to reduce risk? We need a reversal bar, right? So I've got my finger on the trigger here. I know that it's going to be 2 ticks. 1, 2. If I get a reversal bar. If I don't, it's got to stay up above where the market shouldn't go. Does that make sense, everybody? We're just talking through it. If you took a 50-50 trade, it's a medium probability trade. It has to be managed assertively. Initial stop where the market shouldn't go. If a reversal bar prints 2 ticks above, we've just reduced risk. First profits at 67. Guys, you just reached your first profit. That means that your second profit target is at 57 and your stop is at break even. You have absolutely nothing to lose. 78.61 is a potential termination condition. So Joel, if divergence prints for a second time, my small triggers are inside on a 50-50 trade, is this a trade that I still want to be in? What do your rules say? Mine say if that prints, boom, I'm out. I lost my advantage. So guys, I made $100 on my first contract. I made $40 on my second. That's $140 medium probability trade managed assertively using divergence and trigger line location to determine what my course of action should be. Everything revolves around chart reading. Give me a Y in the room. If you're with me, guys, you're going to get to this point. But if you're not there, you need to study. If you're not there, you need to be posting pictures. If you're not there, you need to be asking questions. I know how to do this. My job is to make sure you know how to do this. Ron, small bites. Get in, get out, get in, get out. Everything through momentum. And guys, you ready for the kicker of it all? If you exited because of a higher divergence in the small triggers inside, and the market goes all the way down to 78.14, does it mean that you need to change your plan based on one trade? Does it mean that you need to now start holding through problems because every now and then those problems don't stop the market? Or can you keep yourself in a position where you have advantages? And if you give away an advantage, you read your indicators and determine when it's time to abandon a trade. And everybody's plan is different, guys. It starts with understanding your entries, keeping it mechanical. We use the mechanical approach on this one, right? And we didn't get our second target. Our smaller, faster chart on a medium probability trade said, take profits, wait for the next best. And there you go. Isn't $40 better than zero? In my brain it is. Look what happens. Guys, sometimes the market gives us the best lessons ever. The only reason that I'm so calm, the only reason that I sound so pragmatic and methodical is because I've done the study. Because my spreadsheet is full of the best looks. Because I've taken pictures of management, because I understand patterns in the market, because I've done my study and I do not have a trading plan based on hope. I have a trading plan based on rules. Pardon my French. Guys, the software is kick-ass. And it gives you so many advantages. Your job is to learn how to use those advantages. Your job is to be able to recognize and be consistent and trust. That's where I come in. You have a coach. Every trigger line is below 78.84, right? Every trigger line is below 78.84. That's still the top of the window. C to air. Let's see if market flow gave a signal at the top of that window, just for grins. Not a high probability trade, but if you're looking to work those medium probability trades in, market flow gave a signal at an area likely to stop the market. Your risk is already established. Your smalls are below the large are down. Resistance everywhere, likely to stop per termination conditions. Where's your first trouble spot? Divergence low, right? Guys, this is not a high probability trend trade. This is giving away the advantage of momentum and embracing an area likely to stop. This isn't a trade that wins more than it loses typically. If you're going to take this trade from an edge, your 21-3 should have odds favorable momentum. And it really doesn't. It has large triggers up and small triggers down. Do you see it? Different approach. Joel, show me what you did. Joel, 50-50, perfect entry, quick profits, higher divergence, perfect entry. Joel, virtual high five, my friend. When you let it be easy, it can be easy. When you read your indicators and you go with what's happened versus what I hope happens, everything works out. Joel, you don't seem to be real stuck in a place right now, other than a really good one with some great chart reading. Paul, you got it too? That's the S&P, two divergences to a pivot stop out. Paul takes the pivot stop out and runs it straight down. So that was crude oil. There's the S&P that Paul just took. Look at that. Odds favorable. Everything says down right before daycare drop off. You guys want to talk about patterns again? You divergence guys. Second divergence. Where are the small triggers? Sam, Joel, where are the small triggers on the second divergence? Outside. What's it do? Two divergences here. See how price exceeds that pivot? Right to the midband. Odds favorable momentum. Outside, only two. Paul knows that these two divergences typically take out the previous pivot. He had the best entry ever. Low risk once it gets going, and easy with that much momentum to take it down. Paul, perfect, man. Great trade. It takes time, guys. It really does. It takes time to get good at this. Paul's not showing his P&L. I bet it's nice today. Waiting for the best. And look now. Anything can happen. Price snaps away. Triggers don't follow. Closes the gap. Smalls on the wrong side. Divergence prints. Smalls inside. No reason to hope here. We don't have odds favorable momentum. And Joel, I love to help. And my help is available for everybody, guys. I've met actually, I don't think I've met anybody in this room. Met a couple other traders from the other trading room. We don't have to be best friends to get my help, guys. All you have to do is ask. If you ask, I got you. All I ask from you is that if you say, hey, Mark, I need help, you show me the help you need in pictures. You show me what we're doing so that we can talk about what you see, and then we can start to fix patterns. Ron, I do. I want to be everybody's friends. But especially yours, Ron, because you have a motorcycle. And I miss motorcycles. Waylon. I know, right? I'm good at it. Waylon, what kind of trade is this? 3 divergences from beyond the area. Large triggers down. Smalls below the large. Not coming from areas. Waylon, what made you feel like that market was going to defy every trigger line and go up? Just curious. For me, that's my short. That's my management out of the short, and then I have to wait because I don't have rules met anymore. And Waylon, I know you trade a different set of rules, and it's fun when we win. But this look right here is predicated on momentum here. I hope that makes sense. Momentum style trades have to have momentum, right? If you're going to take that style trade, there should be momentum, which means that you probably get in somewhere over here. Yeah, Paul, snag it's where it's at. I really think so. It's $63. And for that $63, you get all the bells and whistles. And guys, do you know what the most important thing is that you can do on Snagit for a new user? Is you can take a picture of your checklist and drop it right into your picture, and you can start to police yourself. Are my rules met? Or my rules not met? And that's all it is, right? Are my rules met? Are my rules not met? Smalls above the large are wide. They're angled in the direction of the trend. Guys, we're coming into a mid-band off of a bad bottom. Got to be careful. It's pivot stop out. Your window of opportunity, if this is one of the trades on your plan, your window of opportunity is that big. Joel, do you have Snagit? So here's what I did. Is I just pull up my checklist on the screen. Whoops. Sorry, I'm posting it in the room for some reason. Is I'll pull up my checklist just like this. And then Joel, I'll take my Snagit and I'll take a picture just of one of the levels. And then anytime I put a picture up, all I have to do, I can copy and paste, or I can just click and drag, left click and drag it over. And I can always get my checklist on there. And then I can just go through if my rules are met. Pretty cool, right? Oop, Joel, the bot got you. So what do we see here, guys? Here's some chart reading. You're okay. Does everybody see how the trigger lines exceeded the area of support? Paul, this will be your lesson today. Do you see how everything got below support? When everything gets below support, guys, this is your first area for a bounce. The mid-band. It's a good looking trade. That's okay. Waylon, you took a momentum style trade without momentum, is all I was saying. And it's okay. I just want to make sure you're aware. I know that you have a different set of plans, a different trading approach. But you took what is traditionally a momentum style trade, but you took it without momentum. Guys, when my pivot doesn't come from a great termination condition, I tend to give that midband a little more respect. You'll want to do some pictures. You'll want to do your study, but let's see how many times. Just a quick class. You ready? Pivots from beyond, midband creates a bounce. So that's twice. Pivots from beyond, midband doesn't create a bounce. So we're 2 and 1. Pretty much from the area, the midband's cool to break there, right? Pivot from beyond, doesn't even make the midband, support creates the bounce. 3 and 1, pivot from beyond, midband creates the bounce. There's 4 to 1. So we're at 80% right now. Trigger lines below the areas, midband gives the bounce. Triggers below the areas, midband gives the bounce. Triggers below the area, midband gives the bounce. See how we can use patterns? Pretty cool, right? And I'm not saying that that's not a trade with the potential to work, but if I can recognize the pattern, if I can recognize the pattern that when my pullback to the midband starts beyond areas, maybe this look with divergence, this is where maybe I might wait for a market flow signal or use some sort of confirmation tool. Paul, looks like a good day. You need to get the copier on there so that your trades from one account post to both. There's a lot of talk in the traders room, Paul, that'll help you do that. Great job. Up 660 on the day. Through great chart reading, through great entries, beautiful execution. Guys, what's $600 5 days a week? It's a $3,000 week, isn't it? It's a $12,000 month. That's $144,000 a year. Focus on the absolute best of the best. Learning to read your indicators, identifying the advantages. Pretty cool, right? And now look at this, guys. The triggers started below. Pivot stop out. Triggers are above. We're still into this mid band. Not a trade yet, but can't we start identifying termination conditions? We can see that fight. And now we have a pivot stop out. Now my trigger lines are coming from above. Now I have odds favorable, smalls breaking above the large. And now if I felt so inclined in the event of a little pullback, I might feel better about a potential long. If it fits my rules, then I'll make it a trade. How'd we do today, guys? Did anybody walk out of here a little smarter than they walked in? Brand new users, I know it's a lot on day one. I promise it gets easier. A couple days of just hearing the same thing over and over really makes a difference. If you're brand new, I don't want you to gauge your ability to learn the software in one day. What I do want you to do is see how we teach. I want you to see that I'm here for you 15 hours a week. I want you to see that we'll say the same thing over and over until it's so freaking second nature that you're feeling good about it. The software works. It's no different than an elliptical. You can buy the best elliptical in the world. Sam, if price reaches one of these lines, trigger lines don't break through. 50-50 trade, pivot stop out, termination condition. Yeah, CJ Canty, repetition is huge. I want you to get in the habit of taking pictures and showing me everything you see. If you take a picture every time, Sam, if you take this picture, you're going to identify a termination condition, right? You're going to identify a 50-50 coming from a pivot stop out, and you may say to yourself, man, I don't like that, especially when it's already been trying to get through this area. Termination condition. Take pictures of everything you see, guys, not just the trades. It'll make your life a lot easier. It really is. It'll be the most fun you ever had making money. Guys, that's it for me today. Thanks for being here. Thanks for your questions. Thanks for your participation. We're going to do this every day until you guys get it, until you get to where you want to be. And I do believe I'm going to spend my afternoon trading, guys. Stick to your rules. They work. If you don't have rules, write them. Make some flashcards. All right, D said he's going to make us flashcards. Thanks, D. D, check it out. Every flashcard you need. Here's your flashcards for rule number 1. Here's your flashcards for rule number 2. Here's your flashcards for rule number 3. Here's your flashcard for putting it all together. Racha Apex is a, what do they call them? A prop firm. You pass their test, they fund you. Trading with other people's money. Nope, not at all. Completely different. Ninja wants your commissions. Apex wants you to be rich making money following rules. And they're going to take 10% of everything you make. Follow the link and go through and go to their frequently asked questions. Remember that Apex isn't Nexgen. Apex doesn't really have a lot to do with us other than the fact